All right, we're going to go ahead and get started. Thank you all for joining us. My name is Kaylin Hessel. I am the Advocacy and Outreach Manager at the Oregon Able Savings Plan. So I just want to give you a quick overview of how this hour is going to go. We're dividing it up into 3 sections. First 20 minutes is going to focus on unemployment insurance, and then we'll talk about how that and the other COVID-related benefits are going to affect your other government benefits, and then the last 20 minutes will be for ABLE accounts. So at the end of each section, we will have questions for the unemployment folks, and then for the benefits counselors, and then for me at the end. And at the very end, if there's time, we're hoping to be able to answer stuff that we weren't able to get to. So please put them in there. All right, so Zulimar, we're ready for you to go. Thanks.
Okay, all right. Thank you very much. Let me, I'm gonna start sharing my screen now. Let's see. And all right, there you go. Can someone let me know if you can see the screen?
We can see it.
All right, so good morning, everyone. My name is Sulimar Alvira Gonzalez, and I work for the Oregon Employment Department Unemployment Insurance Division. I am also a member of the agency's Equity and Inclusion Council. And today I will be giving you a brief summary on the unemployment insurance programs that we have currently available to assist with the COVID-19 public health emergency, our language access resources, and what to do after you have filed your claim. So first we have the regular unemployment insurance compensation. And this is a program that was created in 1935 to assist workers when they are unemployed by no fault of their own. Benefits paid for this program come from taxes employers pay in simple terms for having employees. We divide the years into periods of 3 months, which we call quarters. So the basic money requirement that, or monetary requirement as we call it, that a person has in order to be eligible for unemployment benefits is that they either worked 500 hours during the first 4 of the last 5 completed calendar quarters, or that they earned at least $1,000 in employment for which employers paid unemployment insurance taxes, and that the total amount that was made is at least 1.5 times the amount you earned in the quarter where you made the most money. So, and that's basically, in a nutshell, our monetary eligibility requirement for unemployment insurance compensation. And the amount, the weekly benefit amount that you can receive for unemployment insurance compensation could be from $151 to $648, depending on how much you earned during the time frame. So to give you just an example, if you filed your claim during January, February, or March of 2020, so of this year, the time that we are looking at is from October 2018 to September 2019. So we are looking at if you made 500 hours in that time period, or if you earned at least 1,000, and that the total amount of money that you made it equals 1.5 times the money that you made in the quarter where you made the most money. All right, and we are also offering pandemic emergency unemployment compensation. And this is one of the programs that we implemented as a result of the CARES Act. To be eligible for this program, you must have run out of benefits on your regular claim. So this is that your balance is 0. And you, this claim must have an expiration date of July 1st of 2019, or after July 1st of 2019, and you must not be eligible for benefits in Oregon, in any other state, or in Canada. Also, you need to remain able, available, and actively seeking work according to the current state rules when you are claiming. For example, every unemployment insurance claim expires after 1 year. So if you had a claim that expired on August 31st of 2019, and you do not qualify for a regular claim in Oregon, in any other state, or Canada, then you may be eligible for PEUC. Another example would be if you have a regular claim that expires November this year, and you have exhausted all of your benefits, and this is that you have a zero balance in your claim, then you have no chance for a claim in any other state, then you may qualify for PEUC benefits. And PEUC benefits, as you can see in the screen, is just 13 additional weeks, and the amount that you will get is the same one that you had in the prior claim. Okay, we are also offering pandemic unemployment assistance, or PEUC, and this program was implemented as well as a result of the CARES Act, and the purpose of it is to provide assistance for people who do not qualify for a regular unemployment insurance claim. So this could include people who were self-employed or that were about to start a job, but then the pandemic happened and they were not able to start that new job, or that they worked but didn't make enough money in order to qualify for a regular unemployment claim. Let's see. So to receive PUA, you must not be eligible for a regular unemployment claim in Oregon, in any other state or Canada, and you must have been out of work because of the pandemic. If you are approved for PUA, you will receive $205 at first. If you want to get more, then you need to send us proof that you earned more than $16,480 during January through December of 2019. And it is very important to note that, so as we say in here, you cannot have a regular claim and a PUA claim. You either qualify for a regular claim or you qualify then for a PUA claim if you do not qualify for the regular one. And in addition to that, we have the FPUC. And this FPUC is an additional $600 that you will receive automatically for every week that you receive payment in the time frame from March 29 of 2020 through July 25th of 2020. So you do not need to apply for FPUC. It will be issued, the payments will be issued automatically when you receive the payments in that time frame for regular unemployment insurance, PEUC, or PUA. And now I would like to talk about a little bit about our language access resources. To access this page, you simply need to go to www.oregon.gov/employee. When you're on that page, you will see a banner that's here on the first image, a yellow banner at the top of the page. And you want to select the COVID-19 general info. It's circled in here. And that when you select that option, you will be redirected to the second image, to the page in the second image. So when you're there, you want to scroll down that page and you will see videos on how to file a claim. And also we have made it possible for people to access our COVID-19 and claims related information in 15 languages. Once you select the language option that you want, that you will find it at the right side of the screen, you will be redirected to a page containing information in that language. And 9 of these pages have videos on how to claim benefits on that other language. Also, if you want to see all of our videos, you just have to select to go to our YouTube channel, and you can do it you see where the first arrow on the left side is that says for more videos, visit our YouTube channel. You can do it that way as well. Okay, and this, I did want to provide just a couple of information for non-US citizen. So you need to be authorized to work in the US in order to receive unemployment insurance benefits. Simply whenever you are filing an initial application, whether it is for regular unemployment or PUA, you want to enter or you need to enter your USCIS number or your A number or your I-94 number on the provided field. So that field will be available once you select that you are not a US citizen. You will be able to enter that information. And this is like the 9 to 11 digits number that you will find in your work authorization document, whether it is your green card or your I-94 document. And once we process your information, we will contact you, probably send you a letter if we require any additional information, which could be a copy of your work authorization document. All right, and so upon request, we do provide reasonable accommodation. Our registration and informational materials are available in alternative formats, and our applications are also available in PDF or paper. Okay, so you may be wondering, so okay, I filed my claim, now what? So if you filed a regular unemployment insurance claim, you need to continue to claim every week you want to get benefits, even if you have not received a letter from us. If you work in a week, then you need to enter the amount of hours that you worked and how much you earned for or you will earn for those hours worked during the week that the work was performed. When we process your claim, you will receive a letter telling you how much money you qualify for or that you do not have a valid claim. So if you receive a letter telling you that you do not have a valid claim, then you may want to file for PUA. If you file the PUA application, then you need to continue to claim every week as well that you want to get benefits, even if you have not received a letter from us. If you work during the week, again, you do need to enter the hours that you worked and the expected earnings. So how much you plan on getting or you will get for those hours that you worked during that week. When we process your claim, you will receive a letter telling you if you are approved for PUA or if you do not qualify for PUA. And if you are approved for PUA, your initial weekly benefit amount will be $205. And here I'm sharing our contact information. It's important to tell you that if you have questions regarding PEUC, you need to contact the regular unemployment insurance. For all questions related to PUA or pandemic unemployment assistance, then you do need to contact that contact center hotline. And I would like to open now the space for questions. Let me see, I don't know if I can actually do it now.
I have some questions. So a few questions came up. So the first question is, will this PowerPoint be sent out? So can we send this PowerPoint out to people who have attended today?
Yes, yes, of course. Yes,
okay, perfect. So that was an easy one. Another question is around the requirements. So when you're looking for work, what are the requirements?
Okay, so we have, the requirements are going to be in our temporary rules. And so right now, if you are able, available, and you're willing to return to work as soon as the COVID-19 emergency declarations have been lifted, then you are considered actively seeking work. But you must be willing to return to work once this situation is over. And also, I encourage you, so our temporary rules can be found in the page, and also in that page that I showed you earlier. So the COVID-19 info, let me go back in here just very quick. So when you get to our www.oregon.gov/EMPLOY page, you will see, you can select the COVID-19 general information. And in that page, there's a lot of information and questions and answers, and you can find information about our current requirements in there.
Awesome, thank you. And then the last few questions are coming in and they're all around specific cases. So I'm not going to read them out loud, but what kind of advice do you have for people who are needing to reach out to the unemployment department, given the amount of claims that are going on right now? What's the best way for people to access and ask questions about their claims?
Yes, so the first thing would be, as I said earlier, continue to claim every week, okay? And the other thing would be, and I know that this may not be what people want to hear, but really, we do need you to continue to try to contact. I know that our director yesterday on the media briefing that he made, he explained how we are working on our phone lines. So hopefully this will get better in the upcoming weeks. So we do encourage you to continue to try to contact, to call us, and remember to claim every week that you want to get unemployment benefits.
Great, thank you so much. I don't see any other questions. So before I turn it over to the next group, any last final thoughts or last questions? One more question just popped up. How far back can somebody make a claim? How far back can they go? So can they make a claim from March?
Yes, you can make the claim for March. It will depend, so how far back, it will depend on the program, but you can do a claim for March. Yes, you won't, however, if, for example, the FPUC, the Federal Pandemic Unemployment Compensation, that's the extra $600, that was not available during March. So the weeks that you claim right, retroactively as of March, then you wouldn't get the 600. The 600 were implemented on the first week of April. But yes, you can, once you get through us, like if what you're wanting to do is to claim weeks back on March, we will take that claim and you will be paid retroactively the benefits that you are eligible for.
And real quick, I wanted to add an answer to another question I saw. I was trying to type the answer, but then it disappeared. So I'm Teresa Rainey, also with the Employment Department, joining my colleague Zulamar. I think there was a question around the PEUC weekly claim form. So that is available on the same site that Zulamar was showing you, and it's for the PEUC weekly certification. It's also called a weekly claim form on the website. And it's the link immediately under the PEUC initial application. So it is on the site. Just take a look, and I can send the link out to Kaylin as well if she's sending a follow-up email to attendees.
That's great, thank you. So keep us on track. I'm gonna move along, but there was one last question, and it is, what if you're finally back to work now, but so far have received no benefit for the weeks that you're out? Do you still claim weekly?
Okay, so if you are back, so you are considered unemployed for every week that you work less than 40 hours and earn less than your weekly benefit amount. So if you are either earning more than your weekly benefit amount, then that week will not qualify. And if you are working 40 hours or more, then the weeks from now on will not qualify. So you do not have to claim the weeks that you earn, in which you earn more than your weekly benefit amount or work 40 hours or more. But if you experience another period of unemployment, then you simply need to restart your claim. So the weeks that already passed that you already claimed, those weeks, once we process your application, you will get the payment for the weeks that you're eligible for. So if you met all the eligibility requirements, you will get the payment for the weeks that you already claimed, even though you started working.
Thank you so much for clarifying and for joining us. I am going to go ahead and switch over to Josh and Katie's PowerPoint and let them take over from here. But this was great information, and one comment that came in said, thank you so much for all this great information.
Yes, you're very welcome, and thank you so much for the opportunity.
All right, can you see the screen, and is the PowerPoint up and ready to go?
Josh, am I unmuted?
Hi, Josh. I can hear you now. Can you hear us?
Okay. I'm heard now.
And Katie, it looks like you're off mute. Can you hear us okay?
Yes, I can hear you. And it looks like the slideshow is not in presentation mode. It looks like it's just kind of,
Got it. Let's see what I can.
yeah, so maybe put that in presentation mode. And then Josh, it's a little hard to hear you. I don't know if that's just me.
There we go. Does that look better?
And on a headset. I'm not sure which one is unmuted.
That's better. Whatever you're using now is better.
Okay, you can hear me now?
Yeah.
Okay. Well, I can get started. I see the slides as being in, not in slideshow mode, but that's okay. You can still see some of the information. So we're here to talk about the CARES Act and how that's going to affect benefits and great information about unemployment and all the special pandemic versions of it. So we are going to talk about unemployment, but also talk about economic impact payments or stimulus payments that folks have either already received or may still be receiving. And then also going to talk about things like hazard pay and how that may affect benefits. But this is public benefits we're talking about, primarily Social Security benefits. That's usually what people's questions would be about at this stage when they approach us. Katie and myself, we're the program managers for the Work Incentives Network, which is a state benefits planning program that we have 11 contracted benefits planners around the state, and then we also certify other community partners to provide benefits planning. So I have our contact information here via email. Certainly reach out with any benefits questions related to how is Social Security or other public benefits going to be affected either by work or by, in this case, unemployment insurance. So ready for the next slide.
toss to this slide over. I'm asking questions because my note's still in presentation mode. Okay, so on my screen it's not, and I can see everything just fine. So let's see if I can change that so everyone else can. Sorry about that.
No worries.
Technology is always a little fun. Let's see if this looks better. Sorry, everyone. I do not know what has happened to my screen sharing here. Are you still seeing the presenter mode or?
Corey, it's still in presenter mode. I would try clicking on enable editing. That might give you more options.
You might be right. How's that?
There you go.
Ah, thanks.
Great.
Sorry about that, you guys.
No worries. Yeah, so there's our contact information. So please do reach out with benefits related questions that we can't address today. So moving on, so we talked about unemployment insurance before and the various other federal pandemic responses to that. But how is that going to affect benefits? And so effect on Title II disability benefits. When we talk about Title II benefits, normally folks are referring to SSDI. That's a benefit that's derived from somebody's past work before they perhaps acquired a disability, but they're deriving that benefit from someone's work record. SSDI would be the worker. SSCDB is when a adult child receives a benefit through a retired or a parent who is either receiving retirement benefits, disability benefits, or has passed away. And SSDWB is a divorced widower benefit that, or disabled widower benefit that is derived from a deceased spouse work record. Thankfully for all three of these types of benefits, there is no effect by unemployment insurance on these benefits because it is unearned income. For these benefits, Social Security really only cares about whether that person is working and earning income. So unearned income from unemployment just simply doesn't have an effect. Also, this does not, Title II benefits do not require a beneficiary to apply for all of their benefits to which they are entitled. And it's not a payer of last resort, which will be relevant in the slide here. It's different from SSI in that regard. But basically, there's nothing compelling someone to apply for unemployment, although obviously it makes sense in a lot of situations to do so if they may qualify. But it also won't affect the benefit at all. And then, of course, Medicare is also unaffected by unemployment. Medicare comes with these types of benefits. Next slide, please. Okay, so much different story though for SSI beneficiaries. So anyone who is on the call who maybe knows someone or is working with someone or themselves is receiving a Title II benefit, you can kind of breathe easy about the effect it would have on that benefit. But for SSI recipients, there is a technical aspect that will be very much affected, although as you'll see, practically speaking, it's not going to jeopardize much. It's not going to change much when you receive unemployment in this time. But the technical effect on SSI, because SSI is a needs-based benefit, meaning it's only for folks who have limited resources and limited income, and because it is a payer of last resort, which would mean that if there's any other benefit out there that someone could qualify for, they must take it before receiving SSI. SSI will be affected by unemployment insurance. So therefore, if you are possibly eligible for unemployment, you actually must apply. We'll get a lot of questions about that with whether someone can just not apply for for unemployment because they want to maintain SSI benefits. technically speaking, Social Security requires everyone to apply for something they may be eligible for. And that same requirement is not relevant for Title II, which we just spoke about. So the extra payments made that were discussed in the previous module, the extra unemployment that's received right now, especially when it comes to the federal pandemic unemployment compensation, the extra $600 that a lot of people are receiving right now, it's treated the same as a regular unemployment insurance, the usual weekly payment. So there's no special rule with SSI as far as they're concerned when it comes to this extra $600 of the FPUC. All treated the same as unearned income. And because it's unearned income, it actually will reduce the SSI payment nearly dollar for dollar. There is a $20 exclusion that applies, but otherwise it's dollar for dollar. So the math works out that if someone receives $803 or more in unearned income, in this case in unemployment, they will have their SSI suspended. And of course, if anyone's receiving the $600 a week, you'll quickly exceed that $803. But even anyone who's not receiving that and just has the regular UI, probably a good chance you could get more than $803 in unemployment in a month. That will cause SSI to suspend, which sounds scary to a lot of folks. Suspension doesn't sound like a good thing, but really it's just meaning they're not going to be paying, the eligibility is suspended, they're not going to be paying SSI for up to 12 months you can remain in this suspended status. So this is different than termination. Termination of SSI would be eligibility is terminated. There has to be a much more formal reapplication to get restarted. But with this particular suspension, it's simply once the unearned income goes away, you can resume SSI. And it actually works out, since you can be on the suspension of SSI for 12 months, and the maximum that someone can receive in unemployment is currently 39 weeks with that extra 13 weeks added on. Normally it's 26 weeks. Clearly that's less than a year. So UI will run out before someone would terminate from SSI, which means they would then resume their SSI payments once unemployment runs out. So really, I mean, it's obviously advantageous financially to draw UI if, especially with the federal, the $600 FPUC per week, you can obviously be drawing a larger benefit than SSI alone. So this, practically speaking, this is, I think, a good thing for most folks. They just have to be aware of SSI going into suspension. The letters that come out do make it a little ambiguous from Social Security. I just had someone forward me the letter yesterday in email wondering if that meant they were terminated, because it says you are no longer eligible for SSI. They're referring to a suspension, and in that case, they just don't make it clear. So there may be a little bit of anxiety around those letters that are received, but again, folks can resume their benefit, their SSI benefit, once their unearned income drops below that $803. And most importantly, oftentimes when a suspension of SSI occurs, there's also a suspension of Medicaid or OHP, which typically comes with SSI. But thankfully, right now, Oregon is not making any adverse OHP or Medicaid decisions during this public health crisis. So essentially, no one is going to lose their Medicaid. It's not going to be suspended during this period, and even though someone may be receiving too much unearned income, that under normal circumstances it would be suspended. Okay, next slide, please. So quickly talk about the economic impact payments. Some folks may still be receiving these. It's not countable as income for Social Security purposes. I think that message has gotten out there pretty well, that that it's really not countable income for most purposes, and that includes Social Security as well. So whether it's Title II or SSI, not countable income. There is the possibility it could be counted as a resource for SSI purposes. There's that $2,000 resource limit for an individual, which will kind of lead into what Kaylin will be talking about with ABLE. But this $1,200 economic impact payment is excluded from resources for 12 months. So if anyone does have it left over after a year, it could count as a resource, but it clearly is meant to be spent in that next year. It's not taxable. It's considered kind of a tax rebate, but it's not borrowed from future tax refunds. Some people worry that, oh, I'm going to get less next year because this is kind of a draw from future tax refunds, and that's not the case either. And For subsidized housing purposes, it's also not counted as income because it's a temporary non-recurring payment. So they're ignoring it as well if someone has any sort of housing subsidies. And as it is considered a tax rebate, it won't affect SNAP or TANF as either. So essentially, economic impact payments, you don't have to worry about those impacting benefits. And again, no impact on OHP or Medicaid because Oregon's simply not going to have any negative impacts on that anyway, and it's just not countable income. And the final slide, please. So I just want to touch briefly, I get this question a lot lately too, hazard pay and bonuses. Specifically, I know Fred Meyer a month or two ago had implemented $150 hazard pay per month, just kind of a lump sum for part-time employees and $300 for full-time employees. And other employers may be doing something similar. There's questions about, okay, is this a bonus? It's considered hazard pay. How is that going to be treated for these various benefit systems? The effect on Title II benefits, it's not really going to, it's considered linked to the productivity of the worker, whether it's countable income or not. So it's going to count as regular income unless the person is getting paid to stay home and not perform work, and it's some sort of bonus, but they're not actually working. In that case, it would be treated differently. But otherwise, it's going to be considered earned income, and the applicable rules for Title II benefits and earned income, which we could talk about if you want to contact us for more information about that, would apply in this situation. Unless there's some sort of evidence to the contrary that shows the hazard pay or bonus was not linked to the worker's productivity. But otherwise, they're just treating it as kind of a pay raise or something like that. For SSI benefits, similar treatment. It's considered earned income. There's no special rules. It's going to affect the payment rate for SSI just like hourly pay would, even if it is kind of a lump sum bonus. So a little less than half of what's earned is going to be counted for SSI purposes, just like it normally would. So no big difference there, but I do get that question a lot because some people wonder if hazard pay or bonuses are perhaps treated differently. So that's pretty much it. Obviously, give us a call or an email with any specific questions, and we can certainly help you out with that. But we don't have much time for questions here, but are there any in the queue?
Let's see. I don't see any questions in the queue around the presentation you just presented. So we do have one question. Lorena was questioning if we can make sure to send the email presentation to her. And so yes, we will be sending out the presentations afterwards. Oh, but it looks like we do just get a question. I'm not exactly sure which one of you this goes to. So what happens when an employer uses money from payroll program plan so the client does not work but gets paid for the 40 hours?
If someone's cut out a little bit, but I think if someone's getting paid but they're not working, if that's the question, that would be, if it's on the Title II side of things, probably would be considered unearned income. And we'd probably want to look at more specifics of that, and someone could contact us directly about that, because sometimes the rules get a little nuanced. But if it's on the Title II side, it does look like it would probably not be considered earned income because the person's not actually working. If they're just getting paid to stay home, that's different. For SSI, it would still have an impact. They may treat it as unearned income, in which case, either way, it's going to impact the SSI benefit. But for Title II, it probably wouldn't have an impact if someone is just getting paid to stay home and not actually doing work. Social Security usually cares about the actual work performed, not just money paid for not doing work.
Okay, so if they have questions around where they fall in that, they should call specifically your program and one of you with that information that's linked in this to get clarity.
Absolutely, we get a lot of, and the emails on that first slide, I would suggest emailing either of us, Katie or myself, with questions, or both of us. We can certainly talk things over in a lot of depth, and if it's to the point where we do need to verify some benefits and go that extra step further, that's when we would sign someone up for the WIN program, get them assigned to a benefits planner who can really provide detailed analysis and advice, and even provide a written report to that person, so that we have a bunch of different levels of service that can really dig deeper and deeper but the first step would just be to get a hold of us.
Wonderful. Thank you so much. We don't have any additional questions. So,
Okay.
and again, everyone will be getting these PowerPoints along with the information so they can follow up. And I am going to turn it over to Kaylin and get her PowerPoint up on the screen.
Great, thank you, Corey. So while you do that, I actually have a question for Katie and Josh. So since there's been a backlog in unemployment insurance payments going out, how does that affect the timing for, maybe getting suspended from SSI? Is it for when you actually receive the money or for like the weeks that you're claiming it? Does that make sense?
Yeah, that's a great question. And we may need to double check the rule for some of this, but with SSI in general, it's when you receive the money that matters. And that's typically with paychecks even. So if someone has 3 paychecks in a month, but one of those paychecks overlaps into another month, they actually count it whenever it's received. So if you get those 3 paychecks in June, the income counts for that month. So I would assume that the same would apply in a situation where unemployment is retroactive. It'll be when you receive it. It might be a little different. It probably would be different with Title II. I'd have to look into that, but it actually won't matter because it's for Title II, it's unearned income, so it won't really have an impact either way. So for SSI, it would be most likely though that when it's received is when it would count, unless there's a special provision that I haven't seen yet.
Okay, thanks so much. That's what I was hoping the answer was. So I'm glad it is.
It's simpler, I think.
Definitely. All right, so like I said at the beginning, my name is Kaylin Hessel. I am the Advocacy and Outreach Manager for the Oregon Able Savings Plan. This is a program that's run through the Oregon State Treasury. It's a program specifically designed to help people with disabilities save money and keep all of those state and federal benefits. Next slide, please, Corey. All right, so why does this program even exist? So Josh talked about it a little bit, but for many state and federal benefits, there's an asset limit or a resource limit. So this usually says you can't have more than $2,000 in your name or you don't get those critical services anymore. And that includes Medicaid and SSI. $2,000, not a lot of money. So this was practically forcing people with disabilities to live in poverty to get services that they need. So thankfully, eventually, Congress figured out this wasn't the best idea. Next slide, please. So back in 2014, they passed what is called the Stephen Beck Jr. Achieving a Better Life Experience, or ABLE Act. So that law allowed for states to create these ABLE savings plans and for people with disabilities to put money in there and not have it count against the asset or resource limit for any of the state or federal benefits out there. So Oregon passed its own version of the ABLE Act back in 2015, and our program officially launched at the end of 2016. It's a public-private partnership, which means that we work with Someday, it's a division of BNY Mellon, and they do more of the hands-on day-to-day administrative things like host our website, actually run the customer service center, deal with the money. And at the state, we provide more big picture guidance. And BNY Mellon is actually the oldest bank in America, and they serve as the bank for the U.S. Treasury. I've heard on any given day, like 1/3 of the world's money goes through their systems. So know that it is very secure. But yeah, it's a great program, and since it launched, we've got about 3,000 account owners who've saved, I think it's around $17 million at this point. So it's successfully working for lots of people throughout the state. Next, please. All right, so my favorite part about ABLE is that from the very beginning, it was designed to be a self-empowerment tool for people with disabilities. And this comes through a number of different ways. First is that the beneficiary, so that means the person benefiting, is also the legal account owner. So both of these people is the person with a disability. And since you legally own the account, it's up to you to decide, who's going to manage it. We know that not all of our savers are going to be able to manage this completely independently, but we thought it was important that we started with that presumption of competence and designed that as the default, and then came up with plan Bs for those who can need some help. So if you decide that you want some help, you can have what we call an authorized legal representative manage the account for you. So there's a few types of people that fall into this category. You have parents of minors, guardians, conservators, or someone with power of attorney. So if there's anybody else like a rep payee, a sibling, or a spouse, the only way that they can manage your account is if you give them power of attorney. And I know that's a scary sounding legal term, but I promise it's not as bad as it seems. If you go to our website, it's OregonAbleSavings.com/forms. Look for the one that says power of attorney. You print it out. It's like a 3-4 page form. Both you and the person you're giving the power to sign it in front of a notary, they stamp it, you give us a copy. And that's a limited power of attorney. The only thing it does is give permission for this other person to manage your ABLE account. They don't get to manage all of your finances, or they don't get to manage all of your decisions. It's just that. And if things change and you want to manage your account yourself or have someone else do it, it's just different forms. That's totally something that can happen. So the other way this self-empowerment comes through is the fact that the account owner actually self-certifies and decides some pretty important pieces of information. So as the account owner, you ultimately decide if you're eligible for this program, and you decide what counts as an eligible expense. So, at ABLE, we give you the rules, and you essentially, check a box saying, I promise under the penalty of perjury that I am following the rules to the best of my abilities. And this just makes it much, much easier to open and manage an account. It takes most people about 10-15 minutes to open one of these accounts. And it means that when you want to go to the store, you can just take money out of the account and go and spend it. You don't have to ask our permission in advance. You don't have to turn in any receipts to us. You can manage it just like you would a more traditional bank account. But as you can tell, there is a lot of trust built into the system. When the ABLE Act passed, it officially changed the US tax code. So that means it is up to the IRS to enforce it and make sure everyone's following those rules. So we recommend keeping track of, proof that you're eligible and receipts for how you've been spending your money. It's a good best practice. But this way, if the IRS ever comes and asks for those things, you'll have them handy. The chances of that happening are slim, but we do always recommend not messing with the IRS. Next slide, please. All right, so let's talk about who actually, let me answer one question first. So Haley says she's a job coach and has a customer who wants to set up an ABLE account. She wants to know if she can do this or the rep payee can do it. So her customer is their own legal guardian. So the customer has to do it his or herself, or has to give you or that rep payee power of attorney. That would be the only way somebody else could manage this account on that client's behalf. All right, so now let's talk about who qualifies. There's 2 criteria someone has to meet. First is age of onset, second is severity of disability. So age of onset means that somebody's disability started before their 26th birthday. If you weren't receiving benefits before then, if you didn't have an official diagnosis before then, that is completely fine, as long as whatever condition you have can be traced back before that 26th birthday. And sometimes, that's kind of confusing. So let's say a person is diagnosed with autism at the age of 40. We know by the nature of that condition, that person has always had autism. The doctor just didn't know what to call it until that person happened to be 40. So that person can qualify. We also knew of a guy who was in a bad car crash before his 26th birthday, but it wasn't until afterwards that he was diagnosed with a traumatic brain injury. Since that injury could be tied to the crash before the 26th birthday, he was able to qualify. So the second criteria is that severity of disability. So we have the same disability requirements that SSI or SSDI require. So if your disability impacts you enough that you qualify for one of those, you can have an ABLE account. So if you're already receiving either of those, it's clear that you do. But let's say you have too many assets or income, or you're currently applying, you can still have an ABLE account. It's just, do you think you meet those disability requirements for those programs. If you're not sure or you want to be extra sure, you can create what we call a disability certification form signed by your doctor. Again, if you go to OregonAbleSavings.com/forms, look for the one that says physician, print it out, take it to your doctor's appointment. It'll explain to your doctor what ABLE is, what the criteria is, and then they can just sign off on it. And you just need to keep a copy of that in your files. Next slide, please. So Jackie asked a great question. She's wondering if there's a possibility that the age of onset will become obsolete and that anyone with a disability will become eligible for this program. So let me give you a little history. When the ABLE Act was first proposed, there was no age of onset. It was going to be open to anybody with a disability. And at Oregon Able, we believe they should go back to that. But it took a full decade to get that law to pass through Congress, and they had a compromise. So the only way they were able to get it passed on a bipartisan basis was to lower that age of onset down to 26. Every year since, there has been a bill introduced in Congress to raise that to 46, which is something that we very much support. And in Oregon, both of our senators and 4 out of 5 of our representatives have signed on as co-sponsors for that. It still has bipartisan support, so we are cautiously optimistic that that will pass one day. But you can never predict what Congress is going to do, and you especially cannot predict what they'll do these days. So make sure to check back periodically to our website, because we will definitely post it there and shout it from the mountaintops if that changes. All right, so what can you save? What can you use ABLE to save for? So there's a big list on there. Each one of those things is specifically written into the US tax code. We've got education, housing, basic living expenses, transportation, employment training and support, assistive technology, personal support services, health prevention and wellness, financial management, legal fees, funeral and burial costs. But thankfully, the tax code also includes that magical phrase, and more. So really, just look at the sentence above. It's anything that improves the health, independence, or quality of life of the person with a disability. So ask yourself, does this improve my health, independence, quality of life? And am I comfortable maybe explaining this to the IRS one day? If the answer is yes, you can use your ABLE account for that. Next slide, please. All right, a couple limits you should know about. There's only one account per person. The most that can go into the account each year is $15,000. That money can come from any source, but the most we allow in is $15,000. The most you can have in there overall is $400,000. The most you can have in there before SSI is affected is $100,000. So when you sign up, we ask if you're receiving SSI so that we can send you a reminder when you get to this point. And if your benefits end up, or if your savings end up going over $100,000 in an ABLE account, that'll start counting against the asset limit for SSI, and it'll be suspended. And like Josh was saying earlier, suspended is temporary, it's not permanent. So that is something to keep in mind. All right, next slide, please. All right, so there is a $35 annual flat fee, and there's also an annual asset-based fee. And that's between 0.3 to 0.35% of what's in the account. So that's less than 1%. And we know that those fees can be hard for people. So know that we're doing everything that we can to lower those fees as quickly as possible. We're only taking what we need to keep the program running. The other fees listed below are ones that are very typical of most banks. Anytime you bounce a check, I think everyone will charge a fee for that. So the only one I want to highlight is the paper statement delivery fee. It is $10 per year. We really encourage everyone to manage their accounts online because it keeps our costs down so we can keep your costs down, but we can mail you those statements if you'd like. Next slide. All right, so I mentioned earlier the most that can go in there is $15,000. There is an exception. It is called able to work. So if a person with a disability is working, they aren't saving for retirement somewhere else, and they have an ABLE account, they can save more than that $15,000 a year. They can save an additional $12,490, or the total of their wages, whichever is less. So if you make $5,000 a year, you can save an extra $5,000. If you make $30,000 a year, you can save an extra $12,490. And it's only the person with a disability who can make one of these able to work contributions, no one else in their lives. So if parents or friends want to contribute, that's great. We just track those things in 2 separate buckets. And since unemployment insurance is counted as income taxable for the IRS, we do allow the unemployment insurance benefits to count as able to work contributions. And I want to stress this last bullet point. So some benefits have asset limits, resource limits, and some have income limits. The asset or resource limit says I can't have more than $2,000 in my name. The income limit says I can't work more than this many hours, make more than this much money. So the ABLE account is only going to be able to help with the asset or resource limits. We're never going to be able to help with the income part. All right, next slide. All right, so one of the cool features we have is our prepaid card. It works similar to a reloadable gift card. You sign up for the card, you decide how much you want to put on it. You can go and spend it anywhere that takes Visa, so almost anywhere. And then once you've spent the money you've put on the card, you're cut off until you log back into your account and reload it. So this is especially helpful for any teenagers transitioning to adults, anybody who might have someone, an authorized legal representative managing their account, because it gives you access to some of spending money, but not everything in the account. There is an additional monthly fee for that. It is $8.25 a month. Next slide, please. We also have an online gifting page, which makes it really easy for friends and family to contribute. You just you go into your ABLE account, you click set up your gifting page, and then you just send the link out to family and friends. And it works kind of like a Kickstarter or GoFundMe. They just click the link and that directly puts the money into your ABLE account. Next slide. Okay, so there are some tax benefits as well. When you put money into ABLE, you get to choose to save or invest. Either way, if that money grows, no taxes are paid on it. And if the person with a disability is under the age of 21, there is a state income tax credit. And that is up to $300 for joint tax filers. And there's more information about that on our website. I can point you that way if you need it later, but I know it's 11, so I'm trying to get through this. Next slide. All right, so within the ABLE account, I said you could save or invest. The cash option is most similar to a checking or savings account. It is FDIC insured, so that means the federal government guarantees that the money you put in there is going to stay in there until you take it out. So that one is your guarantee. The other options are investment options. The names of each of those options match the amount of risk in each of those. So the aggressive option is 80% stocks, 20% bonds. So that means it's going to go up and down a lot as the market does. The moderate is going to be more of a medium amount of risk. Conservative is going to be much more stable. Now's a good time to mention, I'm not a financial advisor, so I can't tell you which of these options is going to be best for your specific situation, but I can encourage you to think about the following things. What are you saving for? Are you going to be taking out the money, 5 years, 10 years, 20 years, or is this going to be like a regular spending account? And then how comfortable are you with risk? Are you going to get heartburn every time you see the stock market drop? If so, the aggressive option will give you a lot of heartburn. So if you decide that's a terrifying thought and you just want the guarantee, you can put all of your money in the cash option. You can also put all of it in one of the investment options or split it between cash and one of the investment options. And you won't be stuck that way forever. You can choose to reallocate or move those around twice a year. Next slide, please. All right, so if you decide you want one of these accounts, please go to OregonAbleSavings.com. The only way to get this is through the state of Oregon. So don't go to a traditional bank. If you have a guardian or someone with power of attorney managing your account, they're going to need to give us copies of that paperwork. So that can be scanned in line for the online application. We also strongly recommend having a traditional checking or savings account attached to the ABLE account. This lets you do an online banking transfer from one to the other. This is the easiest and the fastest way to move money in and out of your account. You also have to put in a minimum of $25. Next slide, please. So this is a good one to maybe take a picture of. It walks you through the steps of opening an account. First is getting information together. You'll need social security numbers or tax ID numbers. You're going to need that bank account information. Then you go to the website, click open account, fill out the forms, attach that bank account, put in $25, and then you're done. Most people are done in 10-15 minutes. There are two exceptions. One is if you give us guardianship or power of attorney documents. Someone on our side has to review it, so it takes a couple extra business days. The second exception happens in what's called the know your customer process. All banks these days legally need to know who they're doing business with, so they have to verify our identities. So there is a section that asks questions like, which of these counties have you lived in? Which of these companies have you worked for? And we found that for some of our savers, they don't have a lot of credit history, rental history, or employment history. And that's what's needed to create those questions. So for some people, there's not enough information about them out there to make those questions. So they get an error. It says call our call center. They'll walk you through a separate process. The alternative isn't that bad. You just print out the paper version of the enrollment form. It's all of the same information. You just mail it in to us with a copy of like a photo ID, and that's it. Okay, next slide. All right, so this is my email address. Please reach out to me with any questions. I can stick around for a little bit and answer some of the ones that we have in the Q&A. But thank you for everyone for participating in this. Really appreciate it. Okay, so let me. Okay, so first question is, can you use the unemployment checks into the able to work option of ABLE if you're, not working right now because of COVID-19? So yes, the IRS considers that income, so we are allowing it. And that $600 per week unemployment bonus, can you put that into the ABLE plan? Yes, you can put that into the ABLE plan. I believe that's also going to end up counting as income, but you can definitely put it into the standard contribution. And because of COVID-19, is there any difference to how much money you can put into the accounts with those different limits? No. Congress would have to change that, and that is not something that they have done because of COVID-19. All right, next question is, does money in the account go to a designated beneficiary at the death of the account owner? What restrictions are there on inheritance? So that is a good question that I have a long answer for. Oh, somebody else wonders that too. All right, so you are not able to list a beneficiary that the money will go to after death. So whatever is in somebody's will apply to the money in the ABLE account. And if there's no will, it ends up going to probate. But let me tell you what happens before that. First step is family next of kin provides us with a death certificate, and then we give them access to pay for any outstanding qualified expenses. So whatever bills still need to be paid can get paid. And then it can also be used to pay for funeral and burial costs. At that stage, whatever's left gets transferred to the estate of the beneficiary. So whoever inherits it or goes to probate. And at that point, Medicaid recovery might apply. So Medicaid recovery, clawback, repayment goes by a couple different names. And a quick version of that is there are some services that Medicaid pays for And after a person dies who received those services, they want to be repaid a portion of the money they've spent on that person's care. So this tends to be more of the long-term care services like nursing homes, and I believe you have to be over the age of 55 when you pass as well. But lots of people told us this was a barrier for them saving. You know, at Treasury, we want to remove barriers to savings. So a couple years ago, the state legislature passed a law saying that Oregon's Medicaid program could not recover funds that had been in an ABLE account. So we thought we got rid of that. It was very exciting for about 6 months, but Medicaid is funded by both the state and the federal government, so they also had a say. So essentially, we're in a gray area. You know, federal Medicaid has told Oregon Medicaid that they don't have to recover funds that had been in an ABLE account, but they can't officially write down in their rules that they won't do it. But there's a state law saying that they can't do it. So I have to tell you that they might do it, which is confusing and not really helpful for anyone. So this is one of the main priorities of our industry. We're hoping to get a law passed nationwide so that you have more clarity of what happens at this stage. But again, can't predict Congress, so I don't know when that might change. But no matter what will happen, you can always pay for those funeral and burial costs and the outstanding expenses first.